Hello, I'm Nick Spicer and welcome to this Portfolio Metrics quarterly update. What were the key events and trends of the third quarter of 2018? It really was a case of America first over the third quarter of 2018, as the US economy and stock market powered ahead of rivals. It was also a quarter of rate rises, the Bank of England raising rates to 0.75% in August, and the US Federal Reserve raising rates by 0.25% to 2.25% in September. The events of the quarter were encapsulated by the three Ps. Protectionism with the US and China trade dispute, the US now levying tariffs on 250 billion of Chinese imports versus 110 billion of US imports from China. Policy, the continuing effects of the Fed rate rises. And politics in the form of Brexit, Italian budget disputes, and of course, Trump. So, how did markets perform amongst all of this? US equities was the best performing asset class in sterling terms, up over 8%, followed closely by Japanese equities. Global government bonds was the worst performing asset class, down almost 1%, followed closely by UK equities. How did portfolios perform? Over the quarter, portfolios rose in absolute terms. Relative performance was solid, with portfolios generally slightly ahead of the average competitor. Fund selection did, however, detract from returns over the quarter. Likewise, from an asset allocation perspective, an underweight to US equities on valuation concerns held back returns. So, looking forward, the big questions going forward revolve around the three Ps mentioned previously. Protectionism. How will the struggle between the US and China evolve? This is certainly a big risk, but there is an incentive for both sides to compromise eventually. And on the wider issue, the US has started to be more accommodating with Europe, Mexico, and Canada in terms of trade. Policy. Another rate rise in the UK is unlikely for some time, but another is expected in the US in December. The risk is that they go too far and too quickly, but markets have been heartened that the Fed seems aware of this risk. Politics. In all probability, the Italian budget dispute will remain a background rumble, but expect lots of noise around the US midterms in November and around the Brexit negotiations. Our expectation is still for a Brexit deal, but the path to a deal is unlikely to be smooth. As is always the case, we are using portfolio diversification to position for this future uncertainty.